Hello, everyone, and welcome back to yet another episode on the Velocity channel. Listen, this is your bridge to financial freedom. Listen, we're going to get into a mortgage example, and I was just reading an article today on how the interest rates have skyrocketed, right? And how there's going to be a hawkish look as far as the interest rates go, and that's going to affect the mortgages, right? That's going to affect different types of loans. And so we're going to get into it right now, and we're also going to show you how you can pay this off drastically because you have the knowledge, because you have the tools, because you'll have the resources, okay? So without further ado, I want you to like, share, and subscribe. We're going to get into this video right now. Listen. I know that there are a lot of you that have mortgages out there. I know there are a lot of you that have these different types of loans. It doesn't matter that this is a mortgage example. You'll see in the coming days that a loan is a loan is a loan, and it can be paid off if you know. It can be paid off, eliminated drastically, right? And very rapidly if you know how to do it. Okay, let's go ahead and get into it. $300,000 mortgage, 30 years at 6%. Now, there's a difference between a security and a loan, all right? Mortgage is a security, but you know what I mean, okay? Home loan, $300,000. Monthly P&I, that's principal and interest, okay? $1,798.65. That's monthly, all right? Not bad. Annual P&I, $21,583.80. Okay? This is what I want you to look at right here. The total for that year, we're going to break it down. The principal, $3,684.04. That's how much of this number went to principal. Look how much went to interest. Take that in. Take that in. Folks, that's why we say, when they say 6%, they actually mean a huger number. On this example, it's 82.9% that you'll be paying. Okay? Not the 6%. Does that look like 6% to you? Look how much went to interest. And look how much is going to the principal. Now, the good news is you can fix all this. I heard a lot of you say, man, I can't save up $17,988. I can't even save up $10,000. I can't save up, CJ, I can't save up $5,000. But you have no problem giving it away. It's not your fault. It's not your fault. Do not blame yourself. Do not say, man, I don't know what I'm going to do. No. None of that is your fault. You were baptized into a system that wants to enslave you. Now, listen, don't take my word for it. Look at this. This is real math that the lenders are doing on you. However, there is a better way. What if I could show you that I can save you at least $204,000 off of this mortgage? Because right now you're going to be paying $647,000, over $647,000 if you go all the way to the 30 years. What if I could show you I could pay this off, right, within the 14 years? Would that be of any value to you, right? Let me just give you a small example of what I'm talking about. All right, so I changed one of these numbers up here, and I think you're going to be very satisfied with what I did. But before I get into that, I want to let you know that get ready for 7% interest rates. July 26th, we don't know what the Federal Reserve is going to do, but really, if you're into the velocity banking concept, if you have these tools and these resources and the right connections, you know, whatever you are connected to, whether you're joining with someone like me or Rick, what I want you to, or even Anthony, what I want you to remember is that when they say 7%, when they say 8%, when they say, hey, rate hikes, that doesn't need to apply to you. So you don't need to be concerned. Remember, We turned 6%, 7% into 0.9%, right? We've turned it effectively into like 1% interest. So when they say 9, 10, 11, 12, right, percent, when you're utilizing the velocity banking method, right, especially when it comes to mortgages, that does not apply to you because you're going to be paying way less, right? A lot of people are going to still be on that 30-year plan for their mortgages. Okay, that's old news, right? We have technology now. This is the 21st century. We can utilize the tools and the resources to get these interests, to cancel out the interest on our mortgages, on our car loans, on any loan. Okay, we can cancel that interest massively. Now, let's get into the annual P&I when we're utilizing the velocity banking tool. When we utilize the velocity banking method, it can go from $21,000 to $14,783.78. Now, that's about $7,000 decrease from the $21,000, right? What we want to do with that is we want to make sure that we tell you and inform you that this is without paying double, which is the 15-year mortgage plan. I was actually talking to one of the biggest realtors here. You know, he's just a massive cash flowing. He has properties here. I mean, he is amazing. An amazing realtor here, amazing, I believe, broker here. And if he's not a broker, he needs to be a broker here in Cochise County. And I would think the best in Arizona. It's my opinion. But I was talking to him. He was like, he still pushes the 15-year plan. Well, listen, if you have that amount of cash each month to send to the lender, to send to the mortgage broker, listen, do it, right? However, it's about canceling out that interest. And the velocity banking method, as you know, trumps that. As you know, by the numbers, it trumps any other plan. And so I just want to let you know that you do not have to take a second job. You do not have to do all of these things that are going to wear you out. You simply have to know where to put the money at the right time. Have you ever heard of the saying that time is money? That's what they're talking about. They're talking about canceling that interest because you know where to put the money, when, at what time. And so that's all I have to bring to you today. Listen, if you don't have the tool, you need to get the tool. If you are joining us on the webinar, you're going to have your socks blown off because we are going to get into way more than this, right? We're going to show you year 1, year 2, year 3, year 4, year 5, and we're going to let you know how you can get out of the rat race and get out of the mentality of, man, I have to pay all the way until I'm dead. And that's what mortgage means, right? Death pledge. So we want to get out of the death pledge as quick as possible so that we can go into our life and doing what we've been called to do. Listen, folks, thank you so much for joining us. And if you have any questions, let us know. God bless, and you guys have a great night.